Hi, everyone. It's good to see so many people joining us today. I'll just wait a couple of minutes to make sure anyone joining can in the next couple of minutes. All right, let's go ahead and get started. My name is Katie. I'm a client service coordinator here at VSH. It looks like we have a lot of people here today, and we're really happy to have you with us. Anything discussed here today in this webinar is not formal tax advice. For recommendations regarding your personal tax situation, please consult with your tax professional. I have a few quick reminders to review with you before we start today's webinar. Because of today's presentation being recorded, we have turned off your video and audio for your privacy, and we will send you a link to the recording in a follow-up email. If you think of a question you'd like to ask, please use the Q&A box on the corner of your screen to share it with us at any time. If your question isn't addressed before the end of the webinar, please keep in mind that we will be following up with you directly via email. If you experience a technical problem or have a general question not related to the presentation, please send a message in the chat. All of the info I just discussed will be available in the chat during this webinar and will be pinned at the top of the section for your convenience. And now I would like to hand over to Sarah to begin our presentation. Thank you.
Well, good morning, everyone, and thank you for joining us today. With the latest round of tariffs now in effect, many businesses are facing a new wave of financial pressure, supply chain challenges, and evolving compliance demands. Our discussion today is designed to help you make sense of these changes and, more importantly, to explore practical steps you can take to mitigate risk and protect your bottom line. I'm joined today by three very experienced international tax professionals who are going to help break down these developments and what they mean for your business, both from a tax and operational standpoint. We're going to try to keep the panel to a little under 45 minutes and allow plenty of time for Q&A so that we can address any of the questions that you have popping up. As Katie mentioned, we have that Q&A box, so please go ahead and submit questions there. We have a lot of information that our group is going to talk about. We will not have any formal slide presentation today. This is more of a podcast style discussion today, but we will have a follow-up email that goes out with some resources at the end. So feel free to weigh in with those questions. I'm going to let each of our panelists now introduce themselves and let you know more about their role at VSH. Lydia?
Thank you, Sarah. I'm Lydia Ahn. I'm the International Tax Partner here at VSH in Bellingham, Washington. Our firm has been specializing in working with Canadian businesses entering the U.S. marketplace for almost 30 years, and our focus is on not only on U.S. and Canada, but really international, but with the focus on the U.S. side of how Canadians can be successful in the U.S. marketplace.
Natalie?
My name is Natalie Trudell. I am the International Tax Department Service Line Leader at VSH, where I've been part of the team for 10 years. I've had the honor of working with many Canadian businesses and their owners over the years, and I'm really looking to be a resource for them during this time of, challenges and uncertainty.
Emma?
Hello, I'm Emma Rightview. I am a CPA and a manager leading the International Tax Department at VSH. I work with businesses and individuals with cross-border activity, and I advise on foreign compliance requirements as well as consult and really try to be seen as a partner in assisting with those cross-border activities they have.
Thank you. We're going to jump into it, and I've already seen a couple of questions coming in, so thank you. We will definitely get to those. Some of these we may answer in our questions and in the content we're going to talk about today. So just hang tight for me. We promise we will get to those questions as we go through and continue to submit them as we're talking here today. So let's start with the current landscape on tariffs that were imposed into the U.S. What happened last week and where does that bring us to today? Lydia, I'm going to start with you on that question.
Thank you. There has been a lot going on. I think that's the that's the answer. And day by day, I'm sure we're all reading and listening the latest. And so really, going back to January, this has all been coming into play. And our focus today is really on US and Canada, although we will touch on the worldwide effects of this too. But really specific to Canada, back in March, the 25% tariff was announced, 10% on energy. Last week, it was largely kind of thought that Canada was spared with any additional tariffs, but obviously there was a baseline tariff on another 70 countries. So still a lot of upheaval in the US marketplace worldwide, stock markets, everything's kind of, up or down. People are watching, trillions of dollars kind of show up and go away, just kind of based on what they guess is going to come next. But really specific to Canada, we're all kind of waiting for this 25% tariff to take place. How does it even work? People don't even know. The border doesn't even know. Just a lot of uncertainty. But I think what everyone is anticipating is in the end, this just is going to be expensive. It's going to be expensive for consumers. It's going to be expensive for businesses. So that's kind of what everyone agrees that they do know, is that it's just going to cost more for everybody.
Thanks, Lydia. That's a scary place for all of us to be, right? All of this uncertainty and still so many unanswered questions, I think, until we get a little bit further along. How are the tariffs imposed by the U.S. affecting trade with Canada specifically?
So specific with trade with Canada, we'll talk today about the Canada-U.S.-Mexico agreement, which we sometimes refer to as the U.S. Mexico-Canada agreement, but we'll kind of refer to it as CUSMA today, since we're talking with Canadians. And so that agreement, which was really President Trump's first administration, is still in play, but everyone's wondering, well, why doesn't it stop what's going on now? And we'll talk more later about that too, but it's really just an agreement. And so specific to that agreement, we still have this 25% baseline and then 10% on energy, except for if products are exempted under that agreement. And that agreement really says if the products originated in North America, in Canada and the US or Mexico, then they should be exempt and fall underneath that. And that, so whether or not those products fall underneath that is really most important today. It hasn't necessarily been so important in the past. And so some businesses may not have known if their products were exempt. But right now that really appears to be a crucial analysis that needs to be done.
Yeah. That's interesting. And I know that's going to open up a lot of conversation today as we talk about, some of the operational items, evaluating what businesses can do and even, where tax fits into that. What are some of the most significant financial and operational challenges that you see businesses will face due to these new tariffs, Lydia?
We're really seeing that businesses are going to have to determine how they're going to either absorb the tariff or pass it on. And really I'm kind of hearing it's probably going to be a combination of the two. And so businesses are going to have to make that decision fairly quickly, and then also just adjusting to the general marketplace talking with all our clients out of Canada the past month or so, and bringing this question up, a lot of what we're hearing from business owners is, well, we're all on the same playing field, so we're just going to see, we assume that everyone's going to raise their prices. And that's probably going to happen, but how much, no one knows until we get there. So we just anticipate, increased costs, lower profit margins. Just it's gonna, as far as when the timing of inventory, the sourcing of inventory, it's going to take a little bit more time and analysis to figure that out. And then it's also going to be more time and energy to figure out customs. What's the best way to deal with that, and is there something better to do? So we just right now see a lot of business owners out of Canada who do business in the US. It's kind of getting their team together, pulling resources together, knowing that everyone is facing the same uncertainty, but it's really, at the end of the day, it's just going to cost more.
I don't think that's a message any business owner ever wants to hear, is it's going to cost more and our profit margins are going to be diminished a little bit. But I think it's the reality of the situation right now in some of this. And so let's start talking about what the impact of this really is, especially on the tax side, because there's a lot at play here. And so, Natalie, I'll start with you on this question, but how do these tariffs affect international tax structures?
Well, really, it comes down to what's been done in the past isn't necessarily going to make sense going forward here. So it's time for business and their owners to reassess their current structures. We have a lot of Canadian businesses that have been really successful, directly reaching the US market through their Canadian company. And now there's going to be increased considerations for whether it is time to set up a US subsidiary or a manufacturing facility or some other physical presence in the US. Some of the benefits are that it offers more stability and access to US customers and supply chains. It kind of will look different for different businesses, but those types of things are critical now more than ever. There's definitely no one size fits all answer here. It needs to be part of a broader business strategy. There's, different pieces of tariff planning that goes into it, as well as just your overall cross-border tax structure. But businesses that already have expansion plans to the US or, are already considering leasing space or using third-party logistics providers, those companies may be, closer to the tipping point of wanting to go ahead and set up their US subsidiary. It also makes a lot more sense when you have US employees and visa considerations. With tariffs now at the forefront, again, it could potentially be part of the tariff mitigation strategy. And with that, I think we'll see increased use of foreign trade zones, which do require you to have a US entity to utilize those. Some companies might also be considering pivoting away from importing directly into the US and instead maybe licensing IP to US manufacturers or, having a similar structure with, their related party transactions. But, at the end of the day, what used to be a relatively simple consideration is now becoming more complicated, and some creative solutions and thinking is definitely necessary, which is why it's good to have a team around you to come up with these ideas.
Natalie, you mentioned something called foreign trade zones, and uh, it's one of those kind of terms that we don't need to know until we need to know it. So, what should Canadian businesses know about foreign trade zones?
Yes, it's definitely kind of a hot topic now with all the tariff talk, but basically it's a zone within the US that's treated as outside of the US for customs purposes. So duties aren't due until products actually leave the zone. And that, really gives businesses more control over when they're paying the tariffs, and in some cases can actually reduce overall cost of tariffs and other related costs. And this is particularly beneficial for those that are manufacturing goods in the US, and can also be helpful for those that are distributing in the US. Just the benefits might look a little bit different. As far as, what this would look like, some larger businesses are looking at foreign trade zones as part of their distribution strategy throughout the US. There are, 300 zones throughout the US that can be part of a network strategy, because goods can move between the foreign trade zones without having to pay the duties.
Wonderful.
So,
sorry, go ahead, Natalie.
yeah, and I mean, one other point is that third-party logistics facilities in some cases have locations in foreign trade zones, which might make it more accessible to some businesses.
Right. That's a lot of trade zones, 300 to try to comply with, but sounds like there could be some decent strategy for the right type of business and the right distribution strategy here in the US.
Yeah, we definitely have local and national resources that are the experts and can help facilitate this setup and understand the full depth of the benefits that it can provide.
Natalie, are there any other tax strategies or incentives that businesses can use to mitigate some of these increased taxes and costs that we're talking about?
Yeah, I mean, one of the things is we know the costs are going to go up, so it's important to just make sure you're reducing costs wherever you can, and maximizing and optimizing your use of the various tax codes is one of the low-hanging fruit that we can always make sure you're capitalizing on. So Canadian businesses that are now setting up in the US, and even US businesses that are expanding, have the opportunity to ensure they're entering an area that has a positive business climate. Each state and local jurisdictions has their own unique tax code. So something that a lot of business owners might not be aware of is that you can negotiate tax credits at the city and state level when you're setting up in a new location. So before you sign any contracts or anything, you can negotiate things like credits and tax rates and grants. One of them is the new market tax credit, where if you're setting up in a distressed location, they can basically reimburse a large percentage of the project capital. For those that type of analysis, we have been working with one of our clients on that I wanted to mention. They've historically been manufacturing lighting, a specific type of lighting in Canada, and then they've had really great success selling across Canada and the US through a US subsidiary. But with the recent aluminum tariffs, it really became important to them to analyze whether it made sense to actually move the manufacturing piece of it to the US. So they did, we worked with them on the cost benefit analysis of that, and determined that they wanted to move forward with the US facility. So once we kind of narrowed it down based on a few different factors, like their distribution hub and where they can get where their suppliers are located, they ultimately landed on Georgia. So now we're working with them on the tax credits and local incentives that are related to job creation and research and development.
That's fantastic. Sounds like a super complex thing to analyze, as far as locations, and taking into account that we have 50 states within the United States, and even probably more state and local taxes that apply to some of those situations. So what about customs and import costs? How can businesses review those, and what should they be thinking about?
Sarah, I'll take that one, and kind of to segue from what Natalie was just describing is our clients have been importing from Canada to the US for so long. And someone asked in the chat, about the $800 exemption, and our clients have used that. It seems like, that's all those exemptions and those de minimis amounts have all been targeted, and some of them were changed last week. But as part of our international team, we're working with customs and trade experts, to bring in those people for our clients, because we're often working with a team of many professionals working in this international tax and consulting sphere. But one thing that we were was a big takeaway for us that we wanted to share today was that for those that are doing, importing, that there's really kind of three things that you can look at, and one of them is just the coding, right? So there's all these classifications that we've been hearing about in the news, and they haven't been so important maybe in the past to get it exactly right, but now your classification for customs is very important. And so even just bringing in outside help to make sure you're using the correct classification is super helpful. The other big takeaway too is the value of the goods. The value for customs isn't the value for tax purposes or other purposes, or you're definitely probably not your financial statement purposes. So just knowing what value you can use and making sure it's the most optimal is another big thing. And then the third one that we're hearing, and that ties back into CUSMA also, is the country of origin. And normally we don't think of that being so important, but I was just listening to some more information for auto importers, and they're talking about something as simple as a car transmission. That car transmission may originate in Canada, and it could cross the border 6 to 7 times before it actually gets installed in a vehicle. And so really everyone has to identify where is anything originating anymore. Another kind of simple example that I was able to understand was a barbecue, that's getting sold at Lowe's or Home Depot. That barbecue could probably be manufactured, each part, in 5 different countries. And the percentage of what goes into the end product is important. And so if you want your country of origin to be, Vietnam versus Malaysia, and probably definitely not China anymore, you might just need to have one different part manufactured in a different country. So now you can put the country of origin stamp on your product that is the most beneficial for tariff purposes. So just a few kind of big takeaways, and we definitely recommend, and we'll provide on a resources page, working with a customs and trade specialist to evaluate. And a lot of times they'll evaluate and they can go back 5 years and just kind of automatically pull your information from the customs agency. So that's kind of an easy way to do it, but really just kind of looking for low-hanging fruit about how you can optimize customs and tariffs better.
And just to interject quickly, I think that's also where tariff engineering can come into play, and it might be a buzzword that you've heard, but it's really just modifying a product, process, or supply chain to legally reduce tariff costs. Another example would be, let's say you sell a jacket and you are now adding a waterproof coating to that jacket. That waterproof coating actually caused the product to fall under a different HTS classification, and as a result, they have a lower tariff rate. So just really looking at ways that you can modify your product or process or what have you in order to take advantage of a better, lower tariff rate. It's also a very good idea.
Thanks, ladies. That gives us a lot to think about. Next, maybe follow-up question logical to this is, how does the trade agreement play into this? I've heard you mention CUSMA a couple of times. I'm sure there's probably some questions on that in our audience today. Can you talk a little bit about that?
I can. So CUSMA still exists, and it allows for tariff reductions and eliminations and free trade between the US and Canada. And another great component about it is it has specific provisions to support small and medium-sized businesses. But prior to the recent changes, 2/3 of the goods that were moving between the US and Canada were not going through CUSMA. That wasn't to say that they weren't compliant, but it just wasn't really necessary. Tariffs weren't very, I guess, for accounting terminology, material. Wasn't something that a lot of businesses had to consider too thoroughly. So sometimes going through the work of seeing if it is compliant with CUSMA wasn't on their radar, wasn't top on the list, so to speak. But now there is a benefit of going through the process of documenting the country of origin, maybe unbundling your goods and services so that only your goods are included in the dutiable value, and just really taking advantage of the exclusions that that agreement may have. I will say you will want to be prepared for a CBP, Canadian Border Patrol audit. So make sure you have thorough documentation.
Thank you. What about the role of trade agreements and alternative sourcing options? And how do those play into helping businesses adapt?
Yeah, we've kind of covered a little bit of that. And I think that, and maybe Emma, you kind of want to add to this too, but really some of those agreements are, as we mentioned, are still in place, but they are just agreements. And so they can be not followed, as we're kind of seeing day by day. And as Emma talked about, you know, the tariff engineering falls into play, and then finding ways, especially between the U.S. and Canada, to reduce or eliminate or just follow under those exemptions, like under CUSMA.
Right. I know we've spent a lot of time talking a little bit about, you know, the strategy of maybe setting up in the US, building a sub, you know, talking about foreign trade zones. But what about companies that are already in the US? Are there any tax strategies that they should be considering?
Yeah, it's definitely a good time to just at least reevaluate what's currently being done, ensure nothing is left on the table. One of the areas that has a lot of room for error is state level taxes, which could be the income, sales and use tax, as well as property taxes. Those might have different exemptions. And since all the state laws are unique, it has to be looked at on a case by case basis. For example, for manufacturers, there are exemptions for sales taxes. And so kind of reviewing what you're doing for that and making sure you're maximizing all those exemptions can, provide a cost savings. And that is an often overlooked opportunity during, expansion or moving, especially. The other important piece for any cross-border tax strategy is transfer pricing. We alluded to it a bit, but it's not the same cost for, duties purposes that you're using for income tax purposes. Those are two separate sets of laws that govern those. But for income tax purposes, having a good transfer pricing strategy not only minimizes the compliance risk that you inherently have when you're working under two governments, but it also can be used to meet cash flow planning and tax planning objectives. So, having a good cross-border transfer pricing strategy is kind of one of the first places that we want to look and make sure that it still makes sense under the current situation.
So we probably can't get through this webinar without at least addressing that we are closer in the US here to a budget resolution. The Senate voted on Saturday here over the weekend, and we don't have a final budget resolution. But now, like, can you talk about what the impact of some of this tax legislation might have on this picture and how that's going to play into some of this, at least for what we know today, which could change by tomorrow?
Absolutely. Well, it's just another really important variable that has to be taken into account when we're trying to model out and understand what could happen under different, scenarios and strategies. So there's been a lot of talk about, various changes, but what keeps coming up is like incentives and lower tax rates for US manufacturers. So that, even though we don't have a solid answer to that, that can't be ignored. It should be taken into account. But, at this point, it's unclear what will be passed. But we can help model this out. We're helping our clients with that, especially the ones that do have a cross-border structure that need to understand what it looks like, not only, from a US perspective, but on a worldwide basis.
Thanks. Let's move into some mitigation strategies, right? What are some practical steps that businesses can take to reduce the financial burden of some of these tariffs?
Yeah, well, Natalie had touched on modeling out, right? So it's all about analysis and planning. First, you'll want to assess your cash flow and liquidity. Lydia had mentioned in the very beginning, it's going to be more expensive. There's going to be unexpected costs. So you really want to evaluate your cash flow and liquidity and ensure that you have some resilience against those unexpected costs. Another point mentioned earlier was price elasticity. So can these increased costs be absorbed without compromising your sales volume? I think that's a really good question you should ask yourself in your businesses and take that into consideration. You'll also want to evaluate how changes in tariffs will affect your operations and costs. So I think a really helpful tool is developing a dynamic pricing model that adjusts based on cost fluctuations. These tariffs, I think, are going to be ever evolving. And so it helps your business to be agile if you're able to already have several scenarios already readily available. And that way you can also have a solution and course of action in case, one of those situations does arise. I know, but overall, just performing import and export data analysis will assist identifying areas where there's opportunities such as duty refunds and savings. And I know it sounds like a lot of work, but that's why there are professionals that dedicate so much time to this and are happy to help. I think outside of that, though, there's also maybe engaging with industry associations and governmental lobbying groups. They can help advocate for policy changes that can help mitigate impacts on tariffs. And I'm sure that there will be some headway made with those in the future. Lastly, I think two other important points that could take a while for me to elaborate on is really supply chain and free trade agreements. We touched on CUSMA already, right? But I think supply chain is another area that has several components to it that can help.
Emma, you just brought up supply chains, and I'm curious, are there specific things that we can do to minimize risk and maintain profitability? That was where Lydia started. This is, we have a reality that we're facing now with these tariffs, and supply chain is a big piece of that. What are your thoughts on that?
Oh yeah, I think a big component of it is, supply chain management and your sourcing of materials. So the first thing you really have to do is evaluate your current supply chain and identify those vulnerable areas. Where are your key dependencies and where is the concentration of risk? Those need to be identified before you can move forward. And I think when you're doing that, it's important to start at a macro level, but you're going to want to work down to the individual parts and materials to really get a full grasp of the depth that these tariffs will have on your product. These tariffs are wide sweeping. We're talking between the US and Canada, but it's also been mentioned several countries can be involved. And you need to take into consideration all of those tariffs when looking at the cost of your product and how it'll be impacted. Once you've done that, you might, after you've identified those areas of vulnerability, you might want to diversify your supply chain. And there's a couple ways to do that. First, identifying alternative suppliers can be very beneficial. Alternative suppliers and sourcing options can help reduce dependency on high-risk regions. Another way to reduce that dependency could be having multiple suppliers, so dual source supply chains. I think, as I mentioned earlier, with these tariffs evolving potentially or new negotiations happening, it's a good idea to have multiple options readily available. Again, it'll help you with being more agile, and it can be a really good competitive advantage in your industry. And lastly, I think something that might be a little bit more capital intensive, but is definitely an option is, exploring options for reshoring or nearshoring. I think there's a lot of companies that have already been toying with the idea of coming to the US. And this may, in some instances, just be the tipping point to make it so where they do follow through and they set up shop here. But I think it's something that when you're considering the idea, you want to see if it's economically viable. So, it's just a complex product with strict quality standards. So you need a really high level skill set and other variables such as, if it's produced with technology, like very technology advanced equipment, those all play a role in deciding if you do want to reshore.
Thanks, Emma, for that. Is this an even playing field for companies? I mean, who is more of an advantage here? Is it big companies, small companies, somewhere in between?
I think they both have their advantages and disadvantages, right? So large companies, first off, they have funds, right? They can receive help from multiple advisors and they have better negotiating power too. They might create a lot of economic stimulus for certain governments or suppliers. So they have that negotiating power. They can utilize economies of scale and they already might have a diversified supply chain. On the other hand, I think that smaller companies are able to pivot at a quicker rate. There's less bureaucracy, and they don't have as much capital invested in their current technology. So I think it's a lot easier for them to change their direction. And there's also, like I said earlier, Kuzma has certain provisions that are beneficial for small and medium-sized companies as well. So I think it's for both of them, they have their advantages and disadvantages, and you just really have to play on your strengths depending on the size of your company.
And just for our audience, we're going to turn it over to Q&A here just in a few minutes. So just encourage you to ask those questions. But as we wrap up our formal part of this discussion, what practical steps should businesses take for tariff planning?
Just to kind of wrap up what Emma and Natalie already shared, it's really working with the other professionals. So we work a lot with Canadian accountants, Canadian and US attorneys, other US professionals, whether it's transfer pricing or, customs or very specific issues. So it's really just being open to working with other advisors. And we're always about collaborating and bringing together the best team for the businesses that we work with. And then really, we've been hearing a lot about, even just your current legal agreements, your current trade agreements, making sure those get updated, because there's always a provision for taxes in there, right? But, and it might have been before about sales tax or GST, but now make sure that who's going to be bearing the costs of tariffs and different import costs, that's important that's updated. And then really, if you're not already working with a customs specialist, and again, reach out if you need, a referral. But in the past, businesses may have been doing it internally and working through it. And now there's probably just too much money on the table to rely on what maybe internally. So really, it's having the team and reaching out and being open to maybe what you did last month or last year, as far as Canada and the US really isn't optimal anymore, and there might be a better structure for you. And it's not always, just about taxes and just about tariffs, which everyone's calling the tariffs taxes, but it's really about what's best and optimal for your business. So we're never just looking at taxes. We're really looking at your whole picture, what your long-term plans are, and what makes sense on a worldwide basis.
Yeah.
Yeah, I think it's important to note too, like I think the companies that will prosper in this environment are the ones that are taking action now. I mean, there's the chicken tax, right? That maybe some of you know about, but between a couple of EU countries and the US way back in the 1960s. And as a result of that, there was tariffs placed on chickens from the EU or from the US, and then in response, the US put some tariffs on some of their automobiles in conjunction with additional products, and some of those haven't been lifted still, and it's the 1960s. So while there might be evolution in these tariffs, I don't think it's a good idea to bank on them going away completely.
Yeah, that's a really good point. I think that's a good opportunity for us to transition to the audience and see what sort of questions they have. I just want to circle back around, Lydia. You kind of touched on this, but I'll make sure we fully answered this for Eric. But he did ask, is the $800 US de minimis exemption still in place for goods going from Canada to the US? I think I heard maybe yes, but I thought we'd just come back to this and make sure that was a really clear answer. And if so, is it in jeopardy of being canceled in the future, at
Right.
least from what we know right now?
Right. I don't have a clear answer. I think that I know what Eric's talking about because we have clients that in the past have been relying on it. And I was just shopping in Canada over the weekend, and the border agent coming into the US was very kind, but he really told me like they don't know what's going on. So I don't know if Natalie or Emma know specific to that, but I haven't seen anything very specific to that $800 exemption, and I'm not really sure that anybody knows. But I mean, if anyone does, feel free to chime in and enlighten us all.
Yeah, there's a follow-up that's related to that question, Lydia, from Wayne, who's asking, can we explain the de minimis on general trade? And if we need clarifying
Okay.
question out there, I think we can put it out there.
There's de minimis for different countries, so I'm not sure if he's talking about just specific to Canada or specific to the whole world. But I'm not sure specific to Canada, the $800 or even the as low as $200. I haven't seen anything that's specific to those specific amounts.
Okay. So our next question is from Amber. She says, I'm still unsure of what is being charged the 25%. For instance, we sell saddles on average of $1,500. Is that being charged a 25%? Or they're having trouble finding, I think, a confirmed answer on this. Do we know anything yet, Lydia, there?
That really is about if it falls under CUSMA. So if the materials are from North America, if it's wholly manufactured from materials, or or it meets a percentage requirement. And so that I'd really look to the CUSMA. There's kind of 4 main bullets of CUSMA to see if that product, is probably the materials and the manufacturing. Does it fall, is it in North America enough to be exempt?
Wayne asked a second question. Can we briefly highlight how transfer pricing is different for customs and financial valuations? And then how do I get more information on this?
I think, Natalie, do you want to cover that one? Because you briefly talked about that before.
I mean, there's just, specific laws that you would apply to the customs price. There, you start with the listed price in your financials, and then there's just add backs and subtractions.
It's 2 different concepts, really. And so they're valued differently. And for IRS perspective, it's about charging related parties those third party rates, so that there's no profit shifting, for instance. So, a lot of companies get looked at for maybe charging too high or too low of intercompany charges, whereas at the border, I think there is a desire to do a higher valuation is what they would prefer the outcome to be for them to get more revenue from a tariff.
Yeah, but I mean, there are, objective rules that can be, somewhat objective rules that can be applied.
And Rob entered in a question here. He says, great info to our panelists. And can you point us in the right direction for any Canadian tools to use to confirm our HS codes for our products that we bring into Canada or export into the US? Any help here is greatly appreciated. Any resources? I know we've got some, and probably put these up on the screen right now with some things that we had put together. But anything we can mention, ladies?
Well, one of the customs specialists that we were coordinating with are offering a free review of your, I think it's called ACE data. You just export your import and export information, and then they'll look it over. And if they can identify cost savings or, refund opportunities, then you would move forward with an engagement with them, and you can go back up to 5 years to get refunds back.
And so if you're interested in that, we'll be sending a follow-up email. Just reply back and let us know, and we can talk to you briefly and get you connected to that customs specialist referral.
And I did find out some information about the $800 that Wayne was asking about. So it is temporarily in place only because no one knows what to do and how to collect when it goes away. So it kind of goes back to everything's changing. It's going to get more expensive, and don't count on it. Being there in the future, it's all on the table. In some countries, it's gone away, like China and Hong Kong. But for Canada and Mexico, it appears to temporarily still be there, but it sounds like it could go away any day.
I think there's a lot that still needs to be ironed out.
Mm-hmm.
I think that's probably the theme, right? And I don't see any other questions that have come in, but I think as we think about this, right? There's like COVID, there was so much uncertainty, and some of this is going to be, like you all said, getting with some advisors and making sure you have the right advice around some of this. It's fairly complex. Is the takeaway I took around this. And for the audience's perspective, I am not an international tax expert at all. But I've learned a lot from these ladies over the years on some of these topics. And so VSH is doing a lot of consulting, if that's not clear, on this topic right now, and helping Canadian businesses through this. And so we will have some of those resources coming out in this email. We'll have, a recap of sorts and a recording if there's anybody else you'd like to listen to this after this. Ladies, any final thoughts that you want to share with our audience as we start to wrap up here?
I guess one thing that, just to reiterate, is just to rely on your Canadian accountants, advisors, attorneys, your U.S. attorneys and advisors, your customs specialists, because there are different rules for each country, and just making sure that everyone's working together to coordinate to give the best advice.
Yeah, I think that in order to navigate this in the best way, you really need to utilize a whole team of experts that have their own specialties that are impacted by this. So I think that we are one of those advisors that are happy to help.
Wonderful. And then if you didn't see it, Katie on our team has put a chat link in the chat. We'd love your feedback on this. And if there's other topics you want to hear about us covering, I know there's a lot changing in this space. It's very likely that we'll have another one of these coming up soon as we have more information. So we'd love your feedback on what you'd like to hear about in the future. But thank you, Natalie, Lydia, and Emma, for sharing your time and knowledge around here. Thank you to our audience for joining us today.
Thank you.
Thanks, Sarah.
Thanks, everyone.